In last class, we have finished what is bookkeeping and what is accounting, and we had also seen the difference between bookkeeping and accounting.
We
So
did even financial and cost and management accounting.
yes, we also did branches of accounting. I told you what is the difference between financial accounting, cost accounting, and management accounting.
Yes,
Today I'm
ma'am.
going to start today I'm going to start with what is accountancy. So last class we did bookkeeping and accounting, and today we'll be doing accountancy. So
Yes, ma'am.
what is accountancy? Accountancy refers to a systematic knowledge. Accounting, the one second, enable my mother. So accounting refers to a systematic knowledge of accounting. So when you have a systematic knowledge of accounting, that is called accountancy. That is why we call the subject as account in our when we need to change the word accounting and accountancy. So when you learn how the accounting is done, then it becomes accountancy. So it explains how to deal with various aspects of accounting. So how to deal with various aspects of accounting is being dealt by accountancy. It educates us why and how to maintain the books of accounts and how to summarize the accounting information and communicate it to the users. That is what the accountancy subject does. It teaches us, it educates us why to maintain books and how to maintain the books. There are various techniques which you'll be learning: how to maintain journals, how to maintain ledgers, how to maintain trial balance, how to prepare the balance sheet, how to do the cash flow statement. It explains the why should we do it and how should we do it. Okay, to summarize the accounting information and communicate it to the users. So in the words of Kohler, accountancy refers to the entire body of the theory and practice of accounting. So what is accounting? Accounting is just the theory. But if you talk about accountancy, accountancy is a much broader term. Accountancy is a broader term. It explains both theory as well as practice. Theory as well as practice. That is what accountancy deals with. Next is accounting and accountancy. What is again accounting and accountancy? What is accountancy? Accountancy is an area of knowledge, whereas accounting is the action or process used in this area. So accountancy, I told you now, accountancy is it's a wider concept. So
Yes, ma'am.
accountancy is an area of knowledge, whereas accounting is a process. Okay. So in that
Yes, ma'am.
area, when you're using a specific action or process, you're basically accounting. Okay.
Yes, ma'am.
For example, accounting for non-profit organization, accounting for profit organization. So whom am I making the books of accounts for? I'm making the accounts for a non-profit organization, let's say a charitable trust. I'm I'm doing accounting for a particular bank. So it is an action or process used in this area. And when we are doing accounting, we are deriving the knowledge from a field called accountancy. Because accountancy explains why should we do and how should we. Accounting depends upon the rules and principles framed by accountancy. Because just now I told you what is accountancy. Accountancy deals with theory as well as it deals with the principles. So accounting depends upon the rules and principles framed by accountancy. So just imagine accountancy is the parent and accounting is the child.
Yes, ma'am.
Accountancy explains how to do and why to do. And accounting depends upon accountancy. But accountancy does not depend upon accounting. Okay. Child
Yes,
depends upon the parent, but parent does not depend upon the child. Did you
Yes,
understand
ma'am.
the concept? So
Yes,
who is
ma'am.
the parent here?
Accountancy.
Accountancy is the parent and accounting is the child.
Yes,
So
ma'am.
accounting depends upon the rules and principles framed by accountancy, but accountancy does not depend upon accounting. Thus, it may be said that accountancy is the whole thing, while accounting is the application part of accounting. So you can see here, this whole thing is accountancy. And accounting is the various part. So what are you accounting for? It can be banks, it can be schools, it can be non-profit organization, anything. So this is accounting, the small parts.
Yes, ma'am.
Did you see what I drew just now? The box you were able to see?
Yes, ma'am.
Okay. Next. What are the objectives and functions of accounting? The next part is what are the objectives or functions of accounting? First is to maintain the systematic record. This we are discussing from the very first. Why are we maintaining the records? Because we want systematic records of financial transactions or events. So whenever we are using the word records, those records should be of financial transaction, monetary transaction, economic events. Did you get it?
Yes,
Yes.
ma'am.
Then next is ascertaining profits or loss. As a businessman, I am interested to, when I'm doing accounting, I'm interested to know how much profits we have earned or how much loss we have incurred. So it can be either profit or loss. A businessman cannot incur profit and loss in a given financial year. It is either or. Then next is ascertaining the financial position. What is the financial position of the company? And this will be depicted by the balance sheet. Okay. Balance sheet, which we will be preparing towards the end of the year. Next
Yes,
is it assists the management. Last class I told you how does accountancy does it? Through cost accounting, management accounting.
Yes,
So
ma'am.
accountancy is the whole area of knowledge. So cost accounting is one separate practice. Management accounting is another separate area of practice. So all these things, be it financial accounting, cost accounting, or management accounting, it assists the management to come at a decision, to help them forecast the future, to help them rectify the mistakes what they had done in the previous year, to control the costs, to improve the revenue. So there are many such things how it can assist the management. And the last one, it should communicate. So at the end of the thing, when the reports are prepared, the report should be communicated. So what are we communicating? The reports will generate something called accounting information. And this accounting information is conveyed to the user. And the users of accounting can be internal user or it can be
External.
external user. Is that clear? So these are
Yes.
the objectives of accounting. Let's revise. Systematic records, ascertaining profits or loss, ascertaining financial position, assisting the management, and the last one is communicating the accounting information. So 5 points.
Users.
Done?
Yes, ma'am.
Yeah. Next is the functions of accounting. What are the functions of accounting? The functions of one second. Now the next one is functions of accounting. What are the main functions of accounting? You can see all are the same, objectives is same, just the names are changing. So it's functions of accounting. Again, see again what is coming is systematic records. Yeah.
Ma'am, if they ask objectives or functions, we can write any of the points, ma'am, of these both.
Yeah, almost it is the same only. You can just know the keywords. So you can here write, but write the functions of accounting, just give that in, but all the points are same. So
Yes.
maintaining systematic records of the business, this is one of the function of accounting. What is what is the functions? So for example, what is the function of my hand? What is the function of my leg? So that is function. Okay.
Yes, ma'am.
And that is function. So communicating the financial results. So this is also one of the functions. Meeting the legal requirements. Now this is what does it mean? Because it is mandatory, the government, it is mandatory by the Companies Act 2013 that all the companies who are doing business, who are registered under Companies Act 2013, they have to publish their books of accounts. Okay, so it is one of the legal requirements. That means they are required by law to maintain books of accounts. So this is something which new, it was not there in objective. This is not the objective of accounting. So don't write this under objective. This is the
Yes,
specific
ma'am.
function. Then protecting business assets. Because accounting keeps a record of all the business assets. So, how can you protect the asset? You can protect the asset only if you know how much assets you have, right? And where are all the assets located. So sometimes the business, when you talk about business, corporate, global businesses are very big. So through the balance sheet, we keep the information about the business, we keep the information about the assets, where it is maintained, how it is maintained, place, the value, all that information is given by the accounting. Because we record all the transactions. When was the asset purchased? How much depreciation was charged? When it is sold, how much was the sale value? All such things. So I'm not elaborating on the word called depreciation and stuff. Just know that there are certain things like that. Then protecting the business assets. So this is also one of the functions. Assistance to management. Again, this assistance to management comes from the objectives what we have done. Because accounting helps assists the management through cost accounting and management accounting to analyze and interpret the results of accounting. Okay. And the last one is stewardship. The last one is stewardship. So this I will explain to you later on in the forthcoming stages. What is stewardship? So I hope you understood how many functions are there? 1, 2, 3, 4, 5, 6. So 6. In this 6, 2 are similar as your objectives. 2 not. 3 are similar. This one is similar. This one is similar. Communication, financial results is similar to your objectives, and assistance to management is also similar. So what are the 3 new things you have learned? The 3 new things you have learned is the legal requirements, protecting business assets, and the last one is stewardship. Remind me, I'll explain you the stewardship at a later point of time. Okay. Now coming to the next part, advantages and disadvantages of accounting. So first is between the advantages of accounting. What are the various advantages of accounting? First advantage is that accounting gives us the financial information about the business. This we all know.
Yes, ma'am.
Information. Then the second one is assistance to the management. It assists the management. Then third is it replaces memory. Why it replaces memory? Just imagine you are an accountant and you have to just memorize all the transactions. It is impossible. So you are recording it somewhere, journal, ledger, you're recording it somewhere. So basically, you're replacing your memory. At the time when you need it, you can just take out the books of accounts and see it, right? See, when you have too many things, even in your personal transactions, like if you have suppose given money to 10 of your friends, it will be difficult for you to remember how much money you gave to whom at what point of time. So in those cases, you will try to write those in your diaries. So at a later point of time, when you need to know how much, who has to return me how much, you can look at the diary and and just get the information. So similarly, in business, there are lots of transactions, lots of financial transactions. So when we are accounting, the process of accounting replaces our human habit. Then it facilitates comparative study. How comparative study? Because the balance sheet of various years can be compared over a period of time. Okay, balance sheet of 2022, balance sheet of 2023, balance sheet of 2024, and with this I can see whether my assets have grown, how much my assets have grown, how much my profits have grown, and how much my liabilities have increased or decreased, and many such things. Okay, so it
Yes, ma'am.
facilitates comparative study, not only the comparison between the company's balance sheet, but for example, Pepsi and Coke. These are two different companies. Okay, now Pepsi can compare its balance sheet with Coke. Same type of firms, they can compare the balance sheet and see who is doing better. So that comparison is also possible. You can compare yourself with the competitors also through the balance sheet analysis. But there are lots of techniques of how to do that. So gradually you will be learning all the various process. Then it facilitates the settlement of tax liabilities. So when the companies earn profit, companies generate income, they have to also pay tax. So how is the tax calculated? The tax is calculated on the basis of information given by the financial accounting. How much income they have earned minus how much expenses they have made. That will give you a resulting profit. And based on that profit, tax will be calculated. Then it facilitates loan. How it facilitates loan? Because if you're a business, if you're a businessman, entrepreneur, and tomorrow if you have to go to bank for raising money for your organization, then the bank is not simply going to give you loan. The bank is going to study the financial position of the company. And how will the bank study the financial position of the company, whether to give loan or not? It will study the financial position of a company through the balance sheet or the books of account. So accounting helps to maintain the books of account. Then evidence in court. There are lots of times, like it can be in the case of financial fraud or any other business litigation or settlement. It can happen, like there can be some disputes within the management, or there can be some dispute between the parties of the business and the business. And thus the balance sheet will, then in that case, the balance sheet will become the evidence in the court for all the business litigations purpose. So the balance sheet will become the evidence in the court. Okay. Then next is it facilitates the sale of the business. So if suppose as an entrepreneur, you want to shut down your business, you want to close your business, you want to sell your business to someone else, then the balance sheet is going to facilitate the sale, because all the information about the assets and liabilities are given in the particular balance sheet. And sometimes, there are times when the companies merge with each other. There are a lot of times when one company buys the another business. So it's acquisition. Or two companies, like for example, Flipkart and Myntra. There are two different brands running, but Flipkart had acquired Myntra. Flipkart purchased Myntra. So how does this purchase happen? It's not a chocolate which you can go and buy in a shop by giving 10 rupees or 100 rupees or crore of rupees. All the assets and liabilities of the two companies have to merge with each other. So the balance sheets helps in all these cases, which facilitates the sale of a business. And the next is assistance in the event of insolvency. You know what is insolvency? The word insolvency means where a person does not have any money, like bankrupt, then it is called insolvency. Similarly, firms can also become insolvent when they have too much of debts and liabilities and they are not able to pay off the creditors. They are not able to meet the, in fact, you will not know the word debts and creditors. So just imagine if the company has taken loan from the bank, and if the bank is not having money to return, if the company is not having money to return to the bank, then that means the company is moving towards insolvency. Insolvency means broke. So in that time also the balance sheet or the financial account, the accountant is going to assist, because a person or a business can be said insolvent when it does not have assets to pay off the liabilities. Liabilities are the loans which it has taken from outside people. So how they will be declared insolvent through the assets and liabilities which is there in the balance sheet. Is it clear?
Yes, ma'am.
And the next is helpful in partnership accounts. So partnership accounts is a very big chapter which you will be learning in standard 12. So sometimes two or more than two people, they come together and do a business. So in that case, the profits are distributed between all those people equally. So in that case also, just giving you a very small example, in that case also, the balance sheet is going to, the balance sheet is the proof, or the balance sheet is a record where all the partners will get to know how much the assets or liabilities the business is having. Okay, so it is helpful in maintaining partnership accounts as well. So all the things what you are studying here as small points will be chapters in your accounting of how these things are done. The next is limitations. Limitations are the what shortcomings or disadvantages. Accounting is not fully exact. Now then, why do we do accounting? Yeah, it's not like that. It's not fully exact. There are a certain times where the accountants will have to make assumptions. Okay, for decision making, they have to take assumptions. So this is one of the disadvantage, and uncertainty is always there. So there are certain events when they will have to be, for example, there was a fire in the godown, and now this information has to be reported in accounting. So how much value of assets was there in that particular godown? The godown manager will be called and he would be asked to, recollect how much of values were there. How much of, like, for example, if it was a rice godown, how much sacks were there in that rice godown? So yes, he would have maintained some of the records. So if the records were not burned, then it is easy. But if suppose the whole thing got burnt with the records, then in that case, the godown manager will have to recall from its memory that how much of sack of rice was there in that godown. So there are certain times when the accounting information might not be fully exact in those uncertain times. Then accounting does not indicate the realizable value. Now, realizable, what is realizable value? Realizable is a resale value. Okay? Because now when we will be doing accounting principles, we will be doing one of the principles which says that all the assets are recorded at cost value, historical cost value, which means when we purchase the assets, like for example, today I go and purchase a computer for my business, and that computer's cost was 50,000 rupees. So today I will be recording in my balance sheet at that computer, I will be recording under the asset side at 50,000. But as soon as I purchase it, its market value might change. But what am I recording in the book? 50,000. So after 1 year, 50,000 minus the depreciation. Depreciation is how much the assets have been used. I'm recording, let's say 5,000 was my depreciation for the year. So next year I'm recording it at 45,000. Whereas next year the value of that computer might be much lower than the 45,000. This is like second hand. For example, today I bought that computer, and the next year when I sell it to someone else, if I don't need the computer, I will never get 45,000. I will get, let's say, like 30,000. The second hand value, how it falls. So accounting does not indicate the realizable value. Accounting indicates how much is the book value of that particular asset. Now, these things might be sounding technical, but when you will be doing separate chapters, then you will understand the in-depth meaning of it. But I am trying to explain you as far as possible what is that. So cost is different from realizable value. Realizable value is that today if you sell, how much resale value you will be getting. So in accounting, we do not record the resale value, we record at the purchase value or the cost value. Then accounting ignores the qualitative elements. Qualitative elements, like as we said in the very beginning, that accounting records only the numbers, financial information. It does not record the qualitative elements. For example, if the forecast is there that the sale will go down by 10%. So this forecast is a qualitative information that there is an estimate that the sale of a particular product might fall because of the change in government policy. Now, this is a qualitative information. Accounting will not record this qualitative information until and unless the real decline in sale has happened. Okay. The next is accounting ignores the effect of price level changes. So price level changes is whether in the market the price level has changed. So these all things accounting ignores. Accounting does not include all these changes until and unless how much it has impacted the business. What is the actual impact on the business transaction? Only that the accounting is recording. But what is a general price level change in the economy, whether there is inflation or the general prices are rising, all that thing accounting does not record. Accounting only records all the financial transactions which are happening in the business, not outside the business. Though the outside things might have impact on the business in the future, but accounting does not record all such changes in that. then accounting may lead to window dressing. And this is what the Satyam scam was all about, if you have read it. Window
Yes.
dressing. Changing the material facts and information to present it in a way that your business is profitable to get more loans from the banks, or any misrepresentation of the balance sheet, a misrepresentation of accounting data is called window dressing. Okay. Accounting might lead to may lead to window dressing because chartered accountants can have the ability to manipulate all the figures. Now, what is accounting information? Accounting information is a service activity because information is a service. It's intangible. Its function is to provide qualitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions. So this is what we are just talking about. All these while that accounting is a service activity. We are not actually purchasing anything. We are accountants are just recording everything. So it's like a service. They're not producing any goods here. It is a function to provide qualitative information about the firm's performance, whether it is doing good or whether it is doing bad, through the record keeping. And the nature of all these information, the financial in nature, because we do not deal with non-economic events or activities. We always in accounting deal with financial nature. Financial nature about the economic entities. Non-economic we do not take. So financial nature about the economic entities that is intended to be useful in making economic decisions. Okay. So that is the meaning of accounting information. So the nature of accounting information is such. Good that you asked this thing. Now, I said that in the limitations, accounting ignores the qualitative elements. But in accounting information, the word is different. The function of accounting is to provide qualitative information. This is different from the previous one. Here it is talking
Yes,
about,
ma'am.
it ignores the qualitative elements. Like this, I gave you an example. If the if the manager, he had to do a deal in the company and he had a fight before coming to the company, he had a fight with his wife. And because his mood was off, they lost the deal. Now, this was one of the loss to the business, but it was a qualitative element. How much loss will happen because of the fight that cannot be estimated here. So this is a qualitative element. Or the death of the CEO's son. And because of the death of CEO's son, the CEO did not come to the company for 1 month. And because the CEO did not come for 1 month, the employees, the people working under them, they had lots of fun. They did not do any good work. And then the company did not create enough revenue. Now, this is a qualitative thing. The death of the fight between CEO and his wife and the death of CEO's son. These are qualitative elements. Now I'm coming to information. Its function is to provide qualitative information. See, accounting just records all the income and expenses. So if the job of accounting is only to do quantitative, like recording all the numbers, will it make any sense? If no one converts the numbers and tells you what is the actual impact, like for example, you go to a doctor does a blood test, and the doctor just gives you all the blood report, samples, parameters, all in numbers, but it does not explain you what does it mean. So when the blood test is done, so there will be a numerical value. For example, if a thyroid test is done, so the value is, let's suppose 5. But if the value is up to 2.5, then it is normal. Beyond 2.5, then that means there is thyroid. So if suppose the doctor does not explain you that 5 thyroid means that you are having thyroid. and you should take this much medicine, and what are the various things you should not eat, what are the various things you should eat. Now, this explanation part of the doctor is a qualitative information, whereas in the report, what the number is given is quantitative information. So the role of accounting is to provide qualitative information. This qualitative is different than what the previous thing came. So all the numbers means nothing if you're not explained what that number means. So if suppose accounting does not give any qualitative information, that then at the end of the year we will have just numbers of transactions and all the numbers written in the books, but we will not be able to understand the result of the business, whether the business made profit or whether the business made loss. So if suppose I have made if I have earned an income of 1 lakh, and for that I have, made an expense of in the business 70,000, 70,000, 72. That means my profit is 30,000. Until and unless I write the word profit here, this 30,000 is not going to make any sense for you. And this is what accounting explains. So the explanation part, the theory part of the accounting is the qualitative information. So accounting is both theory as well as what to say, numbers. So this theory is referred to as qualitative and this number is referred to as quantitative. So accounting is both qualitative and quantitative. This makes accounting. But qualitative, what here you said was, where what is mentioned here was, this qualitative is different. It ignores qualitative elements. This is different. And when we will be doing here accounting principles, there is one principle of, there is one of the principle which says, I'm just not getting that word. There are various principles of accounting. There are 14 principles of accounting, and one of the principles says that only monetary transactions can be recorded. Non-monetary transactions cannot be recorded. Okay. Then the next one is types of accounting information. What are the various types of accounting information? The accounting information can be categorized into the following. First is accounting information relating to profits or surplus. Then accounting information relating to financial position of the business. Then accounting information about the cash flow, whether the business is generating cash or the business is spending more cash. So all these informations are generated by the accounting statement, and there will be big chapters on how to get all these things. Now it's just the overview. The first chapter is the basic overview of what you will be doing over the next 5 years, because now in 11th you just started with the ABC. You have to make sentences, you have to read paragraphs, and till you finish your BCom honors, 5 years of accounting journey. So now you're just learning the ABC. And then after, like for example, when you're finally your BCom, or maybe after finishing 12th standard, or towards the end of 11th standard, all the things what you are reading in the first chapter will start making sense. Okay. So don't get worried about what is this, I'm getting confused, as you will keep on doing the first chapter to second chapter. The previous chapter will get more and more clear. Now, the users of accounting information, this we have already done. Who are the users? Owners, internal users, and external users.
Yes,
Internal users are owners, management, employees, and workers, and external users are banks and financial institutions, investors, potential investors, creditors, government and authorities, researchers, consumers, public. All these are external users who are not directly impacted by the business. They are directly impacted by the business. The next is, this we have already done from your NCRT. The qualitative characteristics of accounting information, that the accounting information should be reliable. It should be relevant. The accounting information should be understandable. It should be comparable. The report should be comparable. This we have already done. I think this is getting repeated. Now coming to systems of accounting. There are 2 systems of accounting. The systems of recording transactions in the books of accounts are 2 types. One is double entry system and the second is single entry system. Okay. This is just a name. Now it will be what is double entry system. The double entry system of accounting was developed in the 15th century in Italy by Fra Luca Pacioli. I have already told the name. And under this system, every transaction has two aspects, debit and credit, at the time of recording a transaction. It is recorded once in the debit side and it is once recorded the second time on the credit side. The double entry system has proved to be a scientific and complete system of accounting followed by every enterprise and organization. Now, double entry system means that when you're recording one transaction, there are two sides in accounting, debit and credit. In the next chapter, I'll explain you what is debit and credit. So whenever I'm recording a transaction, there will be two informations. One information will go to the debit side and one information will go to the credit side. For example, if I have taken loan from Anandini, so in my books of account, I will write, first I'm getting the cash from Anandini. So I will write cash account debit to Anandini's account. Now, why am I not doing Anandini's account debit to cash account? There is a principle, and we will be understanding that in the later chapter. So what I'm trying to explain is that in this particular transaction, when I am taking cash from cash loan from Anandini, I am recording in the books account as cash account debit, being cash coming inside the business, so cash account debit to Anandini. So two places I have recorded. So there will be one. So this is the journal entry which I have passed. Cash to Anandini. Okay. So I have passed the journal entry. Cash account debit. Let's say 1,000 rupees loan to Anandini. 1,000. So this is recorded on the credit side. So one on the debit side and one on the credit side. For now, just keep it as simple as that. So when I'm making the ledger have like T-shaped accounts. So this will be like cash account and this will be Anandini's account. So one thing will go in the cash account and the other side. So this is the debit side and this is the credit side and this is the debit side and this is the credit side. So in the cash ledger, it goes on the debit side because here I have written on the debit side, and in Anandini's ledger, it goes on the credit side. And this is a scientific principle. Similarly, when all the transactions, when you record everything, all the journals and all the ledgers like that, at the end, all the debits and credits should become equal. And when it becomes equal, then that means the way how you have maintained the books is proper. You have not missed any debit entry, you have not missed any credit entry. So it's like a double check which happens. Clear? And this is what is the role of trial balance. And this is what the trial balance does. Now just understand, just listen to it as a story. Don't go deep into it, how it is going to happen. You will eventually know how these things are going to happen. So this is double entry. So what is the essence of double entry? All the transactions and entries are recorded two times, one on the debit side and one on the credit side. Next. So again, here example is given. For example, at the time of cash purchase, goods are acquired and in return cash is paid. So in this transaction, the two aspects are involved, receiving goods and paying cash. So under the double entry system, both these aspects are recorded. In one part, the first part, that is the receipt of goods, is debited. And the second part, that is the payment of cash, is credited. So the method of debit and credit will be discussed in accounting procedure, the rule of debit and credit. So there are different rules, golden rules of debit and credit again. So that we will be doing in the next chapter. Now, next is the features of double entry system. What are the features of double entry system? It maintains a complete record of each transaction. It recognizes the twofold aspect of every transaction, that is the debit side and credit side. The aspect of receiving. When I took loan from Anandini, the aspect of receiving is the cash, what I recorded. And the aspect of giving. So Anandini gave me loan. So that is the aspect of giving. So both I have recorded. That I received cash and Anandini gave it to me. So both the aspect I'm recording, not just that I am receiving cash. Both the aspects I'm recording under double entry system. So in this system, one aspect is debited and the other aspect is credited. Following, and why am I doing it? Because it follows the rule of double entry system, and the double entry system follows the rules of debit and credit. So there are three rules of debit and credit. Next chapter will be the three rules of debit and credit. And since one aspect of a transaction is debited and the other is credited, the total of all debits is always equal to the total of all credits. This is now I just told you. You know, you can see here. Can you see my screen where I have written?
Yes, ma'am.
Yeah. So you can see here, all the debits and credits will be recorded in one place, and that will be trial balance where summary of all the ledger accounts will be given. And towards the end of the year, all the debits, because all the transactions I have debited and the second time I have credited. So all the transaction of debits and credits, when it becomes equal, that means your entry is correct. It is a scientific check which keeps on happening. So since one aspect of a transaction is debited and the other is credited, the total of all debits is always equal to the total of all credits. It helps in establishing arithmetical accuracy by preparing the trial balance. As I told you the first day, not first day, the last class, once we prepare journal. From that journal, we post it into the ledger. And this ledger is the summary of all the debit and credit accounts, which we post in the trial balance. So trial balance is a statement. And in the trial balance, you will have all the debits and credits accounts written at one place. And here you will get the arithmetical accuracy, whether what the journaling and the ledger, what you have done is correct or not. And only after you have prepared the trial balance and this tallies, the debit and credit becomes equal, then only you will go and prepare something called balance sheet. And this is the main objective of the business. Why are we doing all this effort of journal and ledger to prepare this balance sheet? The next is stages of double entry system. What are the stages? Just now I told you. Abhi, I was discussing with you the stages only. So these are the stages. Journal, ledger, trial balance. So I will now explain what are the stages of double entry. The following are the three different stages of a complete system of double entry bookkeeping. The first one is recording. RCI, recording, classification, interpretation. So first we record the transactions in a journal, in a book called journal. So this is called books of original entry. As soon as the transaction happens, it is entered in something called journal. Then the second thing is classification, classifying the transactions in the journal by posting them into appropriate ledger accounts. So I told you, cash account to Anandini. So the cash transaction goes to the cash part goes to the cash account in a proper ledger, appropriate cash ledger. And Anandini has given me money. So Anandini is my creditor. So Anandini's amount goes to my creditor's ledger. Okay. So it goes to an appropriate ledger and then prepares the trial balance. And then the last stage is closing the books and preparing the final accounts. And this final accounts is the balance sheet. So after the arithmetical accuracy check has happened in the trial balance, from journal it has gone to ledger, and from ledger it has gone to trial balance. The trial balance says, okay, arithmetically the journal and ledger is correct. Then so this is the first stage, this is the second stage, and the third stage is closing. So once the trial balance says, okay, it is great, then we prepare the final books of accounts called balance sheet, and then everything, all the financial information is represented. And all these stages will be discussed one by one in the succeeding chapter. So now you're just getting a bird's eye view. What are the advantages of double entry system? The main advantages of double entry system are, it is a scientific system. It keeps the complete record of transactions. It keeps a check on the accuracy of accounts. It helps us to ascertain profit or loss. It gives us the knowledge of financial position of a business. It gives full details for the purpose of control. Comparative study is possible in double entry system. It helps the management in decision making, and there is no scope of fraud. Okay, it is written there is no scope of fraud, but yes, there is a scope of fraud, and that is how the window dressing happens. So actually, this is not so correct, but yeah, because of the double entry system, only the frauds can be also detected. This is also one of the other side of the coin. Because of the double entry system, only fraud can be detected, mistakes can be detected. So this is one of the advantages of double entry system. But sometimes the advantages can be misrepresented also. So that is how the frauds are. And these are the advantages of double entry system. And the next one is single entry system. Okay, single entry system I will not do now. I will do in the next class because then explanation will go long and I'll be just stopping here. Okay.